Hey class, welcome to the course. This is Financial Statement Analysis and Business Valuation. My name is Elliot. I'll be leading you this term. This is Module 1, Week 1. So I just wanted to introduce you to some of the concepts and the content that we'll be covering this week. So first thing, we're in the discussion where we're going to be talking about SSVS, which is the Statements on Standards for Valuation Services. Those are they're set by the AICPA. AICPA, they do a whole host of things. Look into them if you don't know who they are. They administer the CPA exam and many other things. But if you're a CPA, like myself, I have to, if I'm issuing a valuation report, got to adhere to these standards. So I have to be familiar with these. But there are also other standard-setting bodies out there, and part of your exercise this week is going to be to go in and look at this sheet. It's the Business Valuation Appraisal Standards Comparison Chart, and it compares the AICPA to other standard-setting bodies. And you may be wondering, well, why are there multiple bodies? And there's these have just developed over the years. At different points in time by these different entities. There's quite a few reasons why there are multiple, but I think the most important are the AICPA standards. There's NACVA, which is the National Association for Certified Valuators and Analysts. There's the Institute of Business Appraisers, the IBA. They were actually acquired by NACVA several years ago. There's the UPAP, the ASA. ASA is the American Society of Appraisers. So the setup of this was created by NACVA actually. So we've got NACVA standards over here, and then it compares it to these other standard setting bodies over here. For the most part, they're really very similar, but there are differences, and you can discuss those this week. All right, so now let's look at the terms business valuation and business analysis. Now these are often used synonymously, but really they're different. Business valuation is like a niche within finance. It's really like a profession. People do this for a living. I was a business valuation analyst for a long time. So, but within both of these terms, there is you can separate the types of analyses between quantitative and qualitative. Quantitative is obviously your numerically based types of methods. Qualitative is more of a conceptual type. Under quantitative, this is mostly going to be financial based, right? It's going to be your balance sheet analysis, income statement analysis, ratio analysis, looking at your current ratio, debt ratios, working capital ratio, etc. Qualitative, so your competitive analysis, you're looking at industry competitors. So if you're Microsoft, you're looking at IBM, Google, etc. And then market analysis, you're actually looking at within the industry, like supply and demand, that type of thing. SWOT, you're looking at really a lot of different factors. It's strength, weakness, opportunity, threat. So, okay, now within the business valuation field as a profession, it doesn't necessarily have to be a profession, but within it, there are two types of companies that you're going to be valuing. And so there's your public companies and your private companies. Public companies are those that you're familiar with, that you hear, they're traded on the New York Stock Exchange and other public or other global exchanges. And these are going to be companies that you're very familiar with. Your FANG stocks, your Facebook, Amazon, Netflix, and Google. There are tons of companies that are traded on there. But since it is a public market, the types of people and groups that are going to be valuing these companies, and the reason they're going to be valuing these companies are different. So your public investors like you and me, that would be one group. Your institutional investors who do it to make money, and they take positions, like hedge funds, equity funds, things like that. That's going to be a group. Then you have M&A, people or companies doing mergers and acquisitions. They often take teams will often they'll do research before they do M&A, and they'll value a company and decide whether it makes sense for them to add the company or not. Or maybe it's just a division of the company. But there are also some other reasons why you would want to, but these are just some of the main ones underneath public companies. Private companies, if there's a sale, but first let me just say these are going to be your smaller companies, and they're not publicly traded. but they can also be really, really big and not publicly traded. So underneath these, there's going to be, you're going to value it for a purchase. So if somebody wants to buy it from someone, or if there's going to be a member that it is an employee of the firm and they want to buy into the firm, then you're going to have to do a valuation of it, and you're going to take a percentage of that valuation that you're selling as the value. Another reason could be bankruptcy. Another reason could be litigation. This used to happen all the time. Companies, one company would sue another company. So company A asserts that company B did something to hinder or damage profits, and so then you're doing a lost profits analysis. So you'd value the company before the supposed damage occurred, and then you'd value it after, and then you would create a value of what you believe the company would have been had the incident not occurred. So that's sort of a high level view. But and then of course there's divorce. So in many states, the laws kind of vary. There's community property rules at play, and just laws vary per state. But in many, if not most states, if you're married and one person is a business owner, then that person is going to get a half or a little bit more or less percentage of the assets. Well, in order to know what the value of the assets are, you've got to do a business valuation. So that comes up a lot. So that's a real quick overview for this week's material. You'll want to make sure you do 3 things this week. Make sure you turn in the homework. Make sure that you do the milestone. And then, of course, I'll do the discussion board. And let me know if you have any questions. Have a good week.